Good morning, everybody, and this is your DAX day trade setups for today. So, pretty interesting 24 hours coming up. We have 16 countries that are announcing interest rate hikes, including my own. So, it's going to be relatively volatile. I think markets are expecting interest rates to go up based on the American CPI number that came out. But the debate is whether how much is it going to be? Is it 0.5%? Is it 0.75%? Is it 1%? So that's kind of what we are stuck with at the moment. We don't really have a say in the matter, so central banks are going to be controlling everything today, and we just want to be trading with it. So for me on the DAX, the bigger macro picture is this area here. That is the one that if we break below here, all hell is going to break loose. So that's 12,600. So if we just start off just quickly on the weekly, you'll see what I mean. So pretty much flat bottom, triangle. Oscillators are kind of all over the place, but we are in a bear trend, so, or should we say a bear market at the moment, and that's verified by the crossover here on the weekly. So there's nothing really that's pointing to a strong move up or strong move down. Looking at our tweezer bottom here, we did bounce off it, but it just rejected the 155. So we had an inside bar here, an engulfing bar that's been nullified, and now we've got another little inside bar forming. Don't think that's going to impact anything. I just want to get another weekly level here because that's the only thing that's going to keep us sane today. Look to the left, you can see prices are really flirting with the weekly level, quite a strong one. And then just above it is another one, which I would expect us to, those are the two levels that we need to pay attention to on all time frames in actual fact. But you'll see we're going to just fine tune this level now. So this is kind of the view I've got. We are in a downward trend. The weekly is a triangle that's forming. If I do take that trend line on the weekly there for the triangle that is forming, then obviously I've got the potential to go all the way up to here as well, which is around 13,372. But looking at the 3 hour, this is where it gets really interesting. So we were above the moving averages there, then we were messing around in amongst the moving averages last week, and then we dropped below them. Okay, so when we drop below them, we have now almost verified a downward trend, but we need to wait for the retest. Now look what price has done yesterday. We have got back up, and I said to you we need to start refining the levels. There is the first refinement, which is the swing low. We are below the moving averages. Look at the oscillators. They have separated slightly, heading to the top. Diversions from here. There was a previous swing high. Here's the current swing high. And look where the oscillators are. This is all pointing to another leg down. And the leg down target is going to be the base here. But if we drop below that base, it is going to be wild. That's all I can say. Right now, on the hour, we've got a grouping of the oscillators. I need to refine that level again. So you'll notice that we have a 1 hour level, a 3 hour level, and then a weekly level higher up. So anywhere inside here is where I expect us to start selling off. We've got central banks coming out today. I think it's 16 countries in total today and tomorrow who are going to be raising interest rates. So that is the reality of what we have. The question that you need to ask yourself is, has the market priced it in? Was the fall from last week's CPI print the pricing in of interest rate hikes? And then the second question you've got to ask yourself is, how much are they going to raise by? Because if the market is thinking 50%, sorry, not 50%, but 0.5%, and they suddenly raise by 1%, you're going to see a massive move. I don't think they're going to raise less than what the market's forecasts are. So even if they sort of raise them with what the market's forecasting, I still expect us to have a squirt down. There is a gap down here as well. and there is a bit of structure at the gap. If I just look to the left, I'm going to put a line in, just pay attention here. So there's a very small gap here, and it's right, it lines up with this base sit here. Okay, so for me, 15 minutes, yeah, pay attention to what's going on. Yes, we do have a bit of a crossover at the moment, but we have come up to a very strong area of potential resistance, and it is 12,917, it is 12,946, and ultimately 1300. So I expect us to bounce off one of these levels. That is a level for me to get short again, and then we are looking for a move to the downside. There's a small gap here, just on this red bar here. There's a very small gap that I suspect will be targeted, so this low is going to be targeted. Get through the low, then you have a bit of a nightmare coming as far as I'm concerned. I just want to get some monthlies to show you why I'm saying that. You can see there's a strong area, a strong zone of support, but we're just not getting a base here. If you look at the price action, nothing is indicating that we're trying to build a base. Everything is indicating sell off the high, sell off the high, sell off the high. So break below this, you start targeting all these lows here on the monthly. So that would be the next area. It's quite a big zone as well. There, you can see massive area of support in that area, which is around 11,370. So it does look like we are looking for another leg down. Probably just to build a base for buyers to step in and then start driving it higher again. So anyway, that's kind of my plan of action for today. It's watch what's going to go on. Pay attention to the noise. You should see some interest rate hikes coming through today. I'll just quickly look on my trusty noise indicator. So we have the ECB coming out at 7 tonight, so it's going to be after the market closes. So that's not really there. We've got the Feds tomorrow, and we've got a number of other countries today. So anyway, that's kind of my view today. Hope it helps, and we will catch up with you tomorrow morning. Cheers for now.